Tackle today, Matt and Mark Justice from Tackle Trading, bringing you all the news, the charts, the analysis, so that you can be informed in your trading day. Geopolitical headlines out of the Middle East are dominating market action this morning. We'll break all of those down. Let's get to the story right away, Matt. There are statements out of U.S. intelligence that there is an imminent ballistic missile attack from Iran that is targeting towards Israel. This is naturally causing volatility in the market. We're seeing typical price reaction to these type of headlines. Oil spiking, gold getting a bid, treasuries getting a bid, equities under pressure. Break down the price action for us, Matt.
Yeah, when you're looking at the price action today, obviously there's a fair dose of volatility in the market here today, with the SPY down 1% on the cash open, RSP down close to 1%, Q's actually down more than the rest of the market is here today. IWM obviously down more than 1%. Dow Jones down slightly as well, down about 420 points right now in the marketplace. That is right around a 0.5% down. So we are dealing with a little bit of volatility in the market today due to the headlines coming out of the Middle East that Iran is preparing an imminent attack. Now, what that looks like, how it impacts it, is it a similar situation to April? Is it an expansion against April? There's obviously a lot of open questions.
We don't know, right? We don't know.
Yeah, and neither does the market, but that's kind of the point. When you get information like this that has open questions in the market, there's always a sell first, ask questions later. And as the worst fears that we all have oftentimes don't manifest themselves further on down the road, the market does go through a little bit of recovery initially off that news. And so that's how I see the market today. Obviously, there's some concern around going on in the Middle East with what Israel is launching a ground incursion into Lebanon. You have news headlines happening that Iran is preparing a ballistic missile attack and secondary attacks on Israel. Obviously, these are scary headlines, and the market will have that sell first mentality. Let's see what does transpire here from the story. But from a technical perspective, you're really not seeing any changes on the Dow itself. You're still looking at a very similar pattern on the Dow. When you look at IWM, that did give up a little bit of the 9 EMA, but you see this still as a standard bullish retracement pullback scenario, and you're going to see that as long as you stay firm above 215. You give up 215, that's kind of one of those stopping points where you're like, nah, there's nothing left before you get to the 200-day moving average. And so you want to track those important support levels, let the momentum slow down a little bit, and you did kiss off that 20-period moving average here today, but you do have quite a bit of support right around the 215 level on IWM. When you are looking at the Qs, that gave up the 9 EMA here today. Obviously, a good candle, hammer candle yesterday off that 9 EMA, but no dose of confirmation, come right back down here today. Now you're looking at a little bit of a standard pullback. Remember, in pullback scenarios, you first track the 9 EMA, then you track the 20 SMA in that pullback. And that 20 SMA is really close to that former breakout channel right around the 275, 276 level. So keep an eye on that 20-period moving average and tracking that pullback. Obviously, we would love to see a little bit of slowing momentum. And then when you are looking at the broad market here, was looking at a high base consolidation. Now you're looking at a little bit of a pullback here, but you're still above the breakout channel. And that's very important when you're looking at the specific broad market. Remember that 565 level. That is a massively important form of resistance level. We really haven't tested that outside of one day when we had that second day, the Friday following the Fed announcement. Market gapped up on Wednesday, tested that 565 level on Friday, confirmed right back up. And so you do have some pretty decent support right around that 565 level. So what we're seeing in general is a dose of volatility due to some uncertainty coming out of the Middle East. We've given up a little bit of the momentum moving averages. And now in many of the markets, we're tracking a little bit of more standard pullback. And when you do track standard pullbacks, they can get a little bit They get a little bit more choppy than breakouts, no doubt about that. But everybody does love buying at a lower price. So let's see what happens here.
Yeah, you and I have both learned over the many decades we've been doing this to not emotionally react to these type of headlines. Keep a calm, cool, collected manner in your trading. Pay attention to technical levels. Act.
Especially when they don't violate a important support level. If the only thing volatility does is give up momentum and go into standard pullback language, we shouldn't overreact to that. It's when volatility and that uncertainty starts getting a little bit more concerning, and you start showing a little bit more volatility, and you start breaking some stuff. Remember, it's always important to ask yourself a very simple question when it comes to technical analysis. Did the news change the technical read? Did you break anything? Did you break trend? Did you break pattern? Did you break support? That's the ultimate questions. And I don't think when you're looking at the S&P, you can argue anything other than you gave up a little bit of the momentum. But if you'll remember in the newsletter last week, the entire last week, we talked about the market not giving up that momentum already, that it was already acting defensive on top of the breakout. And so I don't see this too different technically as of yet, other than one simple thing: giving up the 9 EMA. That giving up the 9 EMA does start putting it into more of a pullback scenario than a high base scenario. But that's the only change I'm tracking right now.
Yeah, and we're going to walk our community through this, have more in-depth conversations, things we can do throughout our programming coaches show tonight, our traders lounge here in a couple hours.
That technical conversation will be a 30-minute conversation in the traders lounge, and we will break it down from every single time frame. Yes.
Yeah.
100%.
I mean, these are just moments where they're just, management and planning out. And, this is what we excel at Tackle Trading, in helping in our community. While the geopolitical headlines are going to dominate, and rightfully so, we do have a lot of economic data coming in. Completely, this is a different type of day in price action without those headlines, with the JOLTS number being positive. Matt, labor market data in focus. First labor market data reading of the week came in strong. We didn't get to see an algo response to that because it came out a few minutes after the Israel Iran headlines broke. ISM manufacturing came in. Prices actually came down. This was a net really positive day from an economic reporting point of view, obviously getting completely lost and drowned by the headlines today.
Yeah, but it is a good headline number on the Jolt side of the equation. Jolts hasn't been a good storyline for the market in the last
No, it has not.
weeks. In fact, when you do look at the trend of the Jolts report over the course of the last year, it went from 11 million all the way down, right?
Matt, this is the first significant bump of the year.
I would say it's the first significant bump since October of last year.
Yeah.
Yeah.
So
so when you are looking at that first day of October this year, the last time we had a significant bump on the JOLTS report was the first day of October last year. This was, I felt, what a really good number on the JOLTS side of the equation, especially when you have sensitivity around a specific economic indicator, right? And obviously, labor is a very sensitive topic for the market right now in Fed cutting cycles. And so this one, first labor report of the week, and it was a really good one in my estimation. But the really good part of that comment comes from where the JOLTS report has been over the course of just the last little while. Now, remember, last year was about this time frame last year, right around that October time frame last year, where we did get that first JOLTS report that showed a positive mark, and that actually showed a little bit of a bump up. Now, you were going through some general pullback in the market back then, but Mark, it wasn't too long ago after that moment in time where the market found support and created probably the most consistent and best market trend that the market has had this entire cycle over the course of the last few years. And so I'm not saying that's going to happen here today. Obviously, we're dealing with a little bit different situations today than we were last October, but again, it's interesting to see kind of the same environment play out, honestly, from October to October.
Yeah, no, it's something that markets will take a note of later especially if the cumulative amount of job data that comes out this week is positive. We'll continue to track that. Matt, do you have any individual stock stories for us on a day like today?
Amazingly, we do. And in the Traders Lounge, we'll talk about all of them. But we do have a couple stocks here today. Number one, Google got a little bit of a bump up as they got initially on the market open. They got a bump up on some initiating coverage. People see that as an upgrade typically. And Pivotal Research came in with a buy rating on Google. What they did say is they said their price target's 215. That implies a 30% upside. But when they were going through the whole reasons and logic of why they upgraded, they basically just cited it's an attractive valuation in this market and pretty much in any market. I thought it was a very interesting way of describing an upgrade in Google. Pinterest also in the news here today as Goldman Sachs added them to America's Conviction Buy List, one of their highest ratings they can do. That's Pinterest here today. And Ford also got a little bit of a bump up. Obviously, the cash open has changed certain things, but they got upgraded by Goldman Sachs as well. And that's after, if you'll remember, Stellantis downgraded their guidance just yesterday. And all of a sudden, Goldman comes out and be like, well, that doesn't have anything to do with Ford. We're going to go ahead and upgrade them here today. From a technical perspective, when you do look at these stocks right now, Google obviously trying to form some reversal technical formations. You did test up against that top level of the resistance breakout channel. This is a little bit of a cup and handle formation, trying to break out and enter into a little bit of open air. The one flaw in the analysis on this reversal on Google is the 20 weekly that is just a stone throw on top of the price action. A little bit of consolidation would bring that 20 period moving average down, give you a nice little multiple time frame breakout to track on Google. When you're looking at Ford, who got that upgrade here today, they just basically got back the pricing that they gave up yesterday on the Stellantis news. Overall, just kind of stuck in some mud at the lower end of the price threshold. And then when you are looking at Pinterest, which did get on the conviction buy list out of Goldman Sachs, they're forming their reversal in and of themselves. Tried to gap up, got caught up in the news here today and sold off. You look at this on the weekly, trying to reverse here, reversing at a good point, but got a lot of cluster of every single degree of longer duration moving average on top of the price action there as well, Chucky. We'll be covering more of the stocks in the news and those in greater detail in the lounge later on today for the pros.
Yeah, listen, going through commodities holding their own. They typically do in these type of events. Crude oil, we already talked about the spike there. Gold and silver, copper, all up. Break down the charts for us.
Yeah, first and foremost, big dollar spike here today. And
you always like to start at the dollar.
Because I'm going to start on the dollar, because what have I been telling you? 100 and this support level is going to hold, and it's not going to impact the commodities market. And that's the thing I want to talk about here today, because usually this would have a massive impact on the commodities. But the reason the dollar's improving here is because we're seeing deterioration internationally. And so when you see those types of things, dollar up, I wouldn't be concerned about the commodity space until we see a break of that 50 period moving average. But a good hold on the dollar mark. And here's the thing, if the dollar does get up to that 50 period moving average, and we do not see gold and the other commodities give up too much, you're going to love that technical environment as it just pivots back down. So I actually like what we're seeing on the dollar here today, especially in light of the commodities here, because you got a little bit of a pullback on silver, trying to form a little bit of slowing momentum on that 9 EMA here. Obviously, it goes without saying there's a massive resistance level, 29.5 on silver. When you're looking at the futures pricing here, you're just looking at that 9 EMA test. This is a little bit of a pullback type scenario in silver. Would love to see a slowing momentum candle here. Love to see that. We got a lot of news this week, so I don't know if we're going to get too much slowing momentum momentum, but I would love to see just one slowing momentum candle there. When you are looking at copper here, pulling back just a little bit, forming up a little bit of a choppy of a high base, I would say, maybe a flag base pattern. 9 EMA is catching up. A little bit of consolidation would go an extremely long way when you're looking at the copper environment. And then when we go to the shiny pet metal that we call our favorite instrument in the market, gold, gold was trying to pull back yesterday. On a day where the dollar does do what it's doing today, I would have told you there was a high probability that gold would have gave up the 9 EMA and came all the way back down into that 20 SMA, forming a really good bullish retracement. But that news is concerning out of Israel and Iran. And the concerning part of it is obviously geopolitically how this impacts a lot of different things downstream. And I don't want to say typically, I want to say high percentage of the time, we see gold just get a really good bid because it's the number one safety mechanism in all markets, quite frankly. And so you're looking at a little bit of a 9 EMA test here. It did pass that test on the first go around. Now you're talking about a potential breakout against 2,700. Anyway, you splice it. I'm going to like a pullback here. I'm going to like a breakout here.
Yeah, listen, we're going to continue these conversations in depth, talk about portfolio management, things to do, how to react to these type of volatile environments in our traders lounge. This is a community you want to be a part of. Go to tackletrading.com, sign up for that 15-day free trial today.